Okay, folks, here we are. Tom Young here. It is another day. This is Thanksgiving week. It's going to be a great week. I apologize for not being on here more, but I have a lot of stuff going on medically in my life, and I'm trying to get over it. This too will pass. But I have an important message for you today. I've been talking about life insurance, and I want to add and talk about. Where did my book go? There it is. I want to add a quote today. This is from Napoleon Hill's, Philosophy of Personal Success. You are the master of your destiny. You can influence, direct, and control your own environment. You can make life whatever you want it to be. It's up to you. My friend Jody always had a saying, if it is to be, it's up to me. And that was always an interesting thought. But as we talk about life insurance today, the title of my thing is Not All Life Insurance is the Same. Life insurance, it's not all the same. The term life insurance is like saying automobile. If you think about that for a moment, what does that connotate in your mind? I have an automobile. Well, what is it? Is it a Chevy, a Ford, a Chrysler product, a Nissan, a Honda, a Hyundai, et cetera, et cetera? Now, even when you get to that point in time, okay, if I'm looking at a Chevrolet, is it a Monte Carlo? Is it a Corvette? We have all these different variations and versions. Life insurance is exactly the same. As a life insurance professional, and my 49 years experience at this, I have really come to believe that most of the insurance that people purchase is not what they truly wanted. If you get my inference of that, the first thing I want to start with is permanent life insurance. The term permanent life insurance connotates permanence. In other words, it's permanent. Now, permanent doesn't necessarily mean that the premiums are going to stay level and guaranteed. In fact, they are flexible. They could be more or less. Speaking of universal life insurance or indexed universal life insurance, which is the newer version in the marketplace, these products are manufactured with term insurance and a savings element, which could be in an investment or indexes that follow investments, but necessarily don't put your money at risk in any way. But you could earn zero interest in 1 year, or you could earn several percentage. You could earn much more in any given year. But what you have brought risk into the equation. A guaranteed death benefit is another term. Guaranteed death benefit. Well, does it stay level? Does it increase? Does it decrease? Etc. Non-guaranteed premium. The required premium amount is not guaranteed. May fluctuate upon varying costs and economic changes. If I'm using life insurance as a financial planning asset, I have to realize that, it is an asset. It is an asset that has value while I'm alive. It is an asset that has value at my death. And understanding all of these variations, all of the benefits, all the riders and ancillary benefits that are added in to a life insurance policy. It is a lot of information. If I were going to buy something, let's say I was going to buy A and pay $1. Okay, I can buy B and pay $1 and get a different benefit. Or I can buy C, which is $1, but it gives me the benefits of A and B. So if A costs $1, B costs $1, C costs $1, but C gives me the benefit equivalent of what B and A would have given me, what would the rate of return be externally on my dollar I spent on C? I hope I'm not making this too complex, but we have to realize that there are all of these different terms out there. Whole life insurance, permanent life insurance, term insurance, that they are all almost generic in nature, because even term insurance has variations. I can buy annual renewable term where the premium adjusts a little bit each year based on my age. I can buy 10-year level, 15-year level, 20-year level, 30-year level, or lifetime level term insurance premium. Term insurance, remember, is temporary. It is for a specified term of time. If you have a 10-year term insurance policy and you have it for 10 years, that 11th year, that premium is going to go to maybe $10,000 a year instead of $1,000 a year for the next 10 years. Because the insurance company offers a great discount up front, because this is where they get all of your medical information, and they can make an actuarial assumption based on your good health that they offer you a policy with an artificially low premium. And therefore, it looks good. Now, there is cheap term insurance, and then there is term insurance that I would say has quality. Quality term insurance is term insurance that has other benefits. It may have a disability benefit in it, as most term insurance does. So if I become disabled and can't perform my regular occupation after 6 months, they take over and they continue the payment as long as I'm disabled. Now, if I go back to work, I got to start paying the premium again. If I'm going to be permanently disabled, they will continue to pay the premium for the term of the policy. However, there are very, very few companies that offer that disability benefit. So if you have a term insurance policy and become disabled, and it's going to be sort of permanent, or a loss of income of more than 70%, of more than 30% of your annual prior income to disability, there are companies that would convert the term insurance to a whole life insurance policy, a permanent policy that would accumulate a large amount of capital over your lifetime, so that at retirement you would have some source of capital in retirement. Because if you become disabled, your 401k is not going to be continued in any way, shape, or form. First of all, in order to make a contribution to an IRA, 401k, 403b, 457 plan, these are all government programs, you must have earned income in order to make a contribution out of your earned income. So now, when I look at these policies and all the myriad of variations, it is so important to talk to a professional to make sure that the life insurance you purchase is right. And it is really going to do what you want it to do, including all of the extra benefits that a few companies offer in addition. I'm going to close it off there right now. Get my book, The Family Money Farm, The CFO Project, and Financial Mastery Coaching. That's going over top right now. You can get both of those books for free by going to cfo-project.com. There it is, going across. Put in your name and email address, and you will get an email with a link in it to download both of my books. There is also an opportunity there to go further and get coaching and more direction at a small expense. Take advantage of what I'm offering you. My 49 years experience is unbelievably valuable, as I have been told. So God bless you all, and we'll see you here in a few days. God bless. Bye-bye.